All right, so thanks for joining me in this video. Today, what we're going to do is we're going to go ahead and talk about, can you live off of the covered calls option strategy? Now, if you want to learn more about covered calls, definitely check out the website, tradersfly.com. There's much more on there, and if you want to work one-on-one together on covered calls, you can check that out, and there's even a course on covered calls if you want to take a look at that in the courses section. So anyways, there's a couple of big questions that we need to ask ourselves before we even answer this question of can we live off of this. Is first off, living off of covered calls, the big question I think first is, how much do you need to live? Do you need maybe $1,500 a month to live? Okay, well, if that's the case, well, that might be nice, because if you're living in Brazil, maybe you were in the US, which I've coached with people internationally where they used to live in the US and then they moved to maybe a different country like Mexico, Brazil, that kind of thing. And anyway, what they're doing is, well, they have a nest egg and then they're investing it, and the cost of living there is cheaper. So maybe you're only paying $1,500 a month. Whereas maybe in the USA, well, are you living maybe on a $3,000 a month? And you might say, well, you can't do that because rent's already $3,000, maybe $5,000. Well, yeah, of course, depending. Well, if you live like a student, maybe you're paying $500 for just a room. I don't know. Everybody's a little different lifestyle. If you got a family of four, maybe you need, I don't know, $20,000 a month. Maybe you need $80,000 a month. Everybody's situation is different. So it's important to understand kind of like your cost of living. Like here, looking at Brazil right here, your cost of living here, a family of four is $2,220. Single person's only $943, and it's 64% cheaper than many other Latin American countries. And it's also 77% cheaper than the rest of the world. So again, where are you? What kind of lifestyle do you want to have? And that has a huge impact. The other thing is, how much money do you have? Because if you have, let's say, $100,000, okay, versus $20,000, that's going to be a little bit different. Because if you're trying to hit, let's say, a $1,500 a month target on 100,000 versus 20,000, 20,000 is going to be a little bit difficult to hit 1,500. If you got 100,000, it'd be a lot easier. Okay. The other thing is, what risks do you want to take? Look, if you trade more risky stocks, you'll be able to maybe make more money, but you'll get fluctuations on your portfolio growth, right? So that will also impact it. And then the other thing is, what are the market conditions? Well, if the market's kind of grinding up and favoring covered calls, then in that case, yes, all that is good for maybe a couple of years. Or if it's not favoring it, then you might say, it's not working out this year. So in a 10-year time frame, well, maybe 7 of those years are great and 3 of those are not. So you have to be able to think about it that way, because not every strategy works every single time, every time in the market. So that's what you have to look at and take into account. But if you have these things in mind, it's like, okay, well, now logically, rationally, if that's the case, well, maybe you can make it happen. And again, are you living from also appreciation of your stock and slowly selling it as you live in the world? Or are you just kind of holding on to it and looking to make that money from just the call itself? Because if you're looking to make money just from the calls itself, let's just say we're selling a 30-day, that's again a monthly thing on Apple, and we kind of do it at about a delta of, let's say, 15, which kind of gives us about a 85% chance of it kind of keeping our premium. Well, here I'm making about $100. Well, we'll sell a single. Well, how many of these does it take for me to make my living expenses? Well, from Apple's point of view, if I got $2,000 related amount of premium, well, I need about 20 contracts. Okay, so I got to have 20 contracts, and each one is 100 shares, right? So 20 times 100. Okay, so you need to have times 100. You got to have about 2,000 shares, or be able to deal with about 2,000 shares. Now, 2,000 shares of Apple at 155 right now, okay, that's about $310,000. So you can see that covered calls is a little bit not as aggressive on a month-to-month basis in this case if you're trading Apple. Now, Could you do other things other than covered calls? Sure. There's, you know, a diagonal, which is a little bit different, and you can change it around. If you've got more money, absolutely, you could do covered calls along with selling puts. So you could stack more strategies on it to be able to kind of make it happen. But just to show you this Apple example, just from the call side, well, if you're just doing the call part, well, in that case, well, you need about 20 contracts, and that means about $310,000 to be able to handle the amount of stock here that you need. Okay, let's switch this to hide the positions. We'll hide this one. However, if you're looking at appreciation now, okay, and if we're looking at appreciation, now if the stock constantly keeps appreciating though, well, in that case, you might not need as much, because if you're doing it in 30 days, well, and it goes up, well, in 30 days, if it goes up, you could actually make $30,000, because now you're getting appreciation of the stock and the $2,000 from the covered call. So you're making a lot on the appreciation of the value of that stock as well. And if you're taking shares off to pay for your life, that also could contribute to that. So in that case, you may not need as much capital. And now you might say, well, let's cut that maybe into 5 contracts here. And then what we'll do is go in and do only 500 shares. And now as it's appreciating, well, now that's $7,600 just from appreciation and from the covered calls. However, from the calls themselves, you're only making about $480. So again, it depends how much emphasis you put in to the appreciation of the stock versus just doing it from the call side. And if I just do 2 contracts here, if I take appreciation into account, that's where it could be about $3,000. But again, that's taking appreciation into account, okay? And many other factors, as we talked about right here, like what kind of lifestyle do you want to have? Where do you live? You know, and much more. And also market conditions. If it's not favorable for covered calls, then yeah, absolutely, it'll be a little more difficult this time around. So anyway, I hope that helps and gives you some insight. I would definitely encourage you to check out the website, tradersfly.com, and you can learn quite a bit there. And also, if you want to deal with one-on-one coaching on covered calls, you can learn right there, where I work with people for 3 months or so just on covered calls, and working with them on that strategy or other strategies in there as well. Anyways, thanks for joining me. Truly appreciate it. And I will see you in the next video. Take care.